Alright, here's what's really happening with Bitcoin and big money. For years it was retail, crypto natives, and a lot of volatility. Now, the institutions have walked onto the field, but we're still in the first inning. Spot Bitcoin ETFs opened the gates. BlackRock, Fidelity, and others created a regulated on-ramp. Pension funds, RIAs, and family offices can actually use. Billions in inflows, daily volume rivaling blue-chip stocks. Suddenly Bitcoin sits next to Apple in a brokerage account. Institutions run on mandates, compliance, custody, reporting. Now they've got SEC-approved wrappers, qualified custodians, and clean audit trails. FASB accounting rules move to fair value. Translation: companies can mark Bitcoin honestly on the balance sheet. That's not flashy, but it's the plumbing that unlocks real allocation. We're seeing RIAs dollar cost averaging through ETFs, hedge funds arbitraging futures and basis trades, corporates testing treasury allocations. Even nation-states are paying attention, some mining, some holding, some setting policy. Here's the punchline. Most pensions and endowments are at near zero exposure. Many investment committees meet once or twice a year and move glacially. Model portfolios need multi-quarter cycles to add a new asset class. That's why I say, first inning. Model portfolio sleeves that add 1-3% BTC across thousands of advisors. More spot ETFs approved globally, driving cross-border flows. Payment networks exploring settlement rails backed by Bitcoin liquidity. Sovereign wealth funds testing strategic reserves. Institutionalization doesn't eliminate risk. It changes it. Custodial concentration means a few players hold a lot of coins. Derivatives add leverage. Volatility doesn't vanish, it migrates. Regulators can tighten disclosures and capital rules. And yes, rehypothecation is a word we'll hear more. So know who actually holds your Bitcoin. For me, Bitcoin has matured from a bet on a protocol to a bet on a global monetary asset with institutional pipes. I'm not chasing headlines. I care about liquidity, custody standards, and adoption curves. If you believe Bitcoin is a digital, scarce monetary network, then institutions are not the end game, they're the distribution. Price is the scoreboard. The clock is product launches, custody upgrades, accounting changes, and policy clarity. Right now, the clock says early. The first inning brought ETFs, fair value accounting, and real custody. The middle innings are slower, committee approvals, model integrations, and global harmonization. That's where compounding adoption happens. So zoom out, stay informed, and remember, when institutions enter a new asset class, they don't sprint, they stack. And in baseball, games are won over 9 innings.